Hello guys, glad to have you on board again today, just 1 week right after we kind of almost being able to add an answer to last week's question. Was this another bear trap? I would say if we talk about the context and the evolution of this week's context, the answer tends to be both a yes and still need to be confirmed by next week, but probabilities are still fairly high that this somehow has been a trap, but not enough information just all over this week to consider this a 100% reliable type of answer. So this is what we're going to be talking about today. So basically trying to figure out if last week's questions are still in motion or if this answer has already been dealt with, moving ahead with some other forecasts. So it's going to be kind of a two major aspects to develop today in both case scenario, in which first of all we are still dealing with last week's question and the answer we started to give is the wrong one, which means after trapping bears we're trapping bulls right now, which is a very viable option, and we're going to talk about that. Option number two, we fairly trapped the bears. We're going to get on to confirming this by next week and pushing to new higher highs. So we're going to contextualize what may support both case scenarios and how dependent these informations might be. So what type of information you might give a credit to, still assessing that we so far are in a ranging context, which means if you deal with information too much to drive your information, your decision-making process, you're most likely going to end up being fooled. So we assess psychology more than information in a range. So obviously the problem here is that psychological assessment requires obviously an experience because it's a very subjective type of analysis, and therefore obviously someone who has 10-year experience in trading will have a much better psychological assessment of the market than someone who just got to learn. So the problem is what I'm going to be doing out there is something obviously a little bit more subjective, requiring that whoever trades these types of scenario requires to have experience. So it is certainly not something for beginners. Anyway, this is still the same old game. We're looking for reversal trades, and these are not necessarily easy to get. So for the second perspective, which is in a bear trap perspective, we just fuck the bears and need to keep on pushing to high highs, what kind of targets we could eventually get to look for in this perspective. So now, as a quick introduction like we always do, let's have a look at the context, information that has been gathered throughout the week and how the market reacted to this. So as we said, end of last week was basically Trump reigniting the problems with China, and also this type of feeling I had that, I mean, it's just too prepared and it seems too much of a Trump trap over a Friday. So what did we have as a new information about this topic specifically throughout the week? Basically one single new information, which is we're going to have trade talks over phone calls by next week. So it's somehow exactly what I thought. Bad cop, good cop showing right after saying, all right, don't worry, we're going to talk with China no more than anything else, so don't go panic right now. So it's exactly what I thought. This was just another bear trap talking about this China trade that was just preferring to go bad cop first and then try to go better. But this is not the only news we've had. No new monetary injection this week, so no new plans, no new free money, but the free money we've already and previously stated is still flowing day after day, obviously. So monetary accommodation still is in place, but hasn't changed throughout the week. Absolutely nothing regarding how much money is going to be printed and stuff like that. So in terms of monetary policy, it was a totally flat week. Despite a few comments here and there, nothing actually reliable has been said. But in terms of economical data, there has been a lot going on. Like the worst NFP ever seen, the worst IDP numbers. We're now reaching 50% of the US citizens being jobless. When I say this, you might say, fuck that, what a guy is saying, 50% of job? Yes, if you account for 60% participation rate of the entire population, what I'm talking about in here is just that now, a day, less than 50% American citizens are jobless, but it accounts for 40% of the population that isn't counting in the beginning, because 60% participation means 40% citizens are simply not working, right? They're not participating in the active workforce. But now out of this, we've got a 23 or precisely 22.8% unemployment. not the big fancy number that everyone is looking at with generally the 3 stars rating in every economical news release on calendars, but the actual real number, which is the U6, which is obviously including some separate parts of unemployed people in the statistic, and that is way more closer to the actual number in the reality. So the reality right now is 23% unemployment with 60% participation rate. If you just combine those two numbers, you get a 45% employed people in the US, which means if you take a random citizen down the street, 1 out of 2 is going to be out of job, either because it's just not participating to the workforce for most of them, and obviously more than 20% of the others that were previously working are now out of job. So how long is it going to last is the obviously tricky question out there, because obviously these numbers seems to be temporary as long as they haven't been proven wrong. Yes, we assess them to be temporary, but is it? It's the actual question we might wonder. So in terms of economical data, the process right now seems to have been, it's going to be shitty. Even if it's shittier than expected, we don't really give a shit. If it's better than expected, oh great, let's pay it. So it's really the bad news is good news, and good news is good news, and free money is good news. So it's just a torrent of good news, which is very dangerous, obviously, because it's rising psychology to a very, very tricky turning point, which means right now bears are exhausted, me included, because every bear scenarios we've had with bearish signals, all right, that are weaknesses in the technical structures of prices, no more than that, and technical is just one part of trading, not certainly the entire thing. It's just the only controllable thing in trading. You can't control your risk management, you can't control how a trade will go on. When we talk about a single trade, all right, there are so many external factors that can be at play, like monetary policy, obviously, and here is a huge catalyst. Political manipulations of prices are another one, which means SPX right now, despite the technical analysis, has a shit ton of other factors influencing prices. So I would say right now, the fourth pillar that we need to assess, so political pressure, they're always going to be bullish, obviously. Well, would you expect Trump to put the market down? No, he doesn't want to. And if he tries to do it, it's only because he expects probably to play this stupid good cop, bad cop thing. That exactly was what I planned. Now, coming from economic data, we just expect it to get worse and worse until we actually have some improvements. But so far, it's just keep on going worse. So we kind of got used to it. In terms of monetary policy, I think we've got to the tipping top of the thing. Like I told you, I think we might expect some further accommodation as well, but nothing close to the actual momentum we've had so far. So we've got the best of it, we've got the worst of numbers, and we've got political pressure to the upside, which leaves us with the fourth pillar, the psychological mind state of the market. I think right now this is the most important one because bears are exhausted. They had very strong signals coming from multiple weeks in a row. But the thing is that none of those signals tend to validate so far, which means we have clues, we have early validation, but cannot get to confirm. So bears are getting really exhausted right now, and therefore we do have a very stupid type of a bullish sentiment that comes out of bears being exhausted. Like bears are failing, so bulls are real strong. And that is really a bad choice, because if you have a look at volumes, bulls are not there anymore. Bulls are probably profit taking, and sellers are being targeted, which means we're rising because of bears' stop losses, which is exactly what we've done last year's. But we were in a range. So in a range, rising because of bears' weaknesses is definitely what we do, just like we fall off a cliff because of bulls' lack of strength. That's exactly what happened throughout the latest years. When the bears are selling, they're fueling the upward market, just like when the bulls are buying, they're fueling the downside market. Right now, we're right in the middle of this thing, and no one's buying, and no one's probably going to sell either, which means it leaves me to believe that we don't have much options out there. Either the political pressures takes on over the prices, which is because it's the last thing that can take over speculative trading. So either political takes down speculators, which means I'm going to be proven wrong. Probably my cover positions will be taken off the market, and I'll just let myself be in the ride to the upside without covers, because basically that doesn't make any sense. So in a technical portfolio management right now, the only reliable answer I get to the context analysis is that I'm going to keep on doing this thing. Being partially bullish, but not very well exposed, because I still think this underlying price structure is dangerous if it keeps on rising like that. can hardly be no more than a bubble, so I don't want to be too much exposed to a bubble. If we pull back, it's probably going to be an interesting investing opportunity upon signal. Of course, that depends that the economic signals are strengthening and that we hold on to supportive areas. So this is something that is depending on future forecasts. And in the meantime, anytime I've got weaknesses signal, technical weakness signal, I'll just keep on covering the portfolio. So it's more like covering. If I get stopped out, I'm back in the bullish game because I think there is limited upside potential. But anytime we get to some further weaknesses, selling again to cover the portfolio. If it gets stopped out, taking the stop losses at break even and start all over again until I have some real conviction that the market is ready to go up. Because I think right now what we're experiencing is the exact same old thing, which means Trump administration trying to trap bears by some stupid good cop, bad cop. The rest of it is just balancing because actually the Fed is balancing the ugly as shit data we've got. And so far, both of them tend to be on an equilibrium state, which leaves us market psychology versus Trump. Trump is trying to obviously influence market psychology. The big question is, will he succeed? Yes or no? So now let's have a look at technicals because we're 11 minutes in. It was a long introduction, but I think it was absolutely necessary to state these contexts. So out of a weekly basis, technically speaking, broke the lows, maintained the highs, even though we closed at the high. That is not a bullish candle. We are in a major bearish oscillation with a bullish oscillation in the daily chart. So we don't know which one is going to be taken over. That's the reason why I'm still forecasting range as a most probable structure, technically speaking. Now we need to zoom in. Out of a daily chart, still lots of gap because that's the current motive right now, like gapping into this range. Absolutely no confirmation for bearish signals. And if we have a look at the daily chart, we might be with a end of a negative cycles for cyclical activity. So after making this deep top point, we still have, because this thing hasn't reversed yet, so we're still in a negative cycle, but in a late stage. So if we go bearish, it has to be fast because we burnt most of the gas. But you also know that trends in stock market generally tend to release most of their energy within the late stage of this cycle. So I still tend to believe that for the bears, the game is still not yet over, even if we terminate with a very, very strong upward day, bullish gapping on top of the previous day. So Friday definitely has been a bullish days and a solid point, solid score for the bulls. The question is whether or not we're going to have a reversal by next week. So if the bears want to take it over, because they still can, so far, like I said, the weekly candle isn't bullish. The weekly candle, even if it closes at the high point, failed to break the high points of the previous week and broke to new lows, all right? So we'll see what it is. Even if Monday has been slightly breaking to new lows before closing bullish, this thing, if we gap there by next Monday, we can go straight line for a few days and erase the entire pricing structure in here, okay? What's really staggering in here is just that Friday came with the worst possible number ever coming from economical data, absolutely no balancing from the Fed. So this day has entirely been about what the fuck is going on? Worst number, absolutely no support from Fed, and basically market went up anyway. So the question I'm wondering right now is the underlying price structure. And I can tell that what I see in here is what drove my latest decision on Friday, which is I decided to sell over weekend, even though we closed at the high. I see this two-wave structure with a lot of gap, certainly not signs of trending, all right? These things are most likely signs of ranging. When we gap too much like that, it's not a good sign. So I'm wondering if by next week we're going to go starting right with a negative gap. That's the reason why I've gone selling over weekend. We can leave those gaps open and start next week by just selling and get instantly fucking this support. So that's my plan. If Monday is reacting like that, I think I'll be just setting my stop at break even. I still have my bearish position over the previous weeks, which means I'll have two positions to the downside with stop losses at break even, pure and simply. Over the week, I've been trying to sell this area because that was a very strong technical area as well, but somehow we failed. I was bearish in these prices. We had validation with this ugly candle in here, but the day right after failed confirmation, wrong-footed the bears, and basically took all the stop losses away. So it's more like I reinforced, got stopped at break even, and had to build it all over again. I'll build it by next week, but just wanted to have one single position over weekend just in case of a bearish gap, because that's the thing. If the bears are still at play, and if psychological state of the market takes over the Trump's manipulation, Obviously, in that perspective, we're over bullish under resistance and we're going to heavily fail, which means if there is a reversal, it's not going to be gentle. It's probably going to be done with a gap, which means if we reverse, I think that there is going to be a very, very, very dangerous turning point day. A sentiment changing day in which we immediately go from, oh, the bears are really weak, to, oh, damn, the bears are here and the bulls were wrong. So in a psychological way of assessing the markets, I think this type of session is very probable. Not necessarily on Monday, but I think Monday can be that type of day in which we reverse and sell hard. Like I think we could be just there in a single day. So I wouldn't be surprised of a Black Monday type of thing. Just Black Monday in a type of thing that it rapidly changes the psychological state of markets. Typically what happens in a range, when we get too much bullish because we think we can't do anything different, it's generally when we find the market top. So in order to go bullish and taking down the bears one more time to go higher highs, in that perspective, I think that we need to go gapping up right on Monday, or to just open clear and get to clear the immediate market top right on Monday. Okay? So that is something that we're going to assess with the futures markets. The problem is in here, I still tend to see that the structure is terminated. We can see the 5-wave structure in here, the 2 consolidative wave, and in here a 5th wave extended, first wave extended structure, but that structure is mature as well, and we're dealing close to 76% retracement of this wave, which means even if that looks bullish, it can very well reverse, and if it reverses, we're going to make new lows. So I'm still bearish. Very cautiously, because technically odds are there, but I can still say that there is a huge tons of pressure on top of it. So that is my current motive. If we go bullish, to me, it's real simple, because the bulls definitely have some technicals to support them. For most of it, we failed to reverse the context. If this thing was actually bearish, normally we should have reversed context in here. Though framework is a very sensitive tool, which means in here, even if we failed to reverse, we can still consider that we've dipped a toe in some serious territory out there. So it's a matter of technical analysis. It's 1 inch away from having been reversing. It hasn't, which means at some point it's a give it or take it. I think it can supply both case scenario. Like normally we should have reversed, but the fact we fail could be some of a bullish sign. If it is, then first target, reaching out to higher highs in here and get to trade above context, which means 4-hour overcoming, which means we're going to trade on top of the 4-hour context once again, which is exactly what we've done in here, which means I'll try to sell anytime we do it, all right, and respecting the plan I shared you earlier. So my plan remains exactly the same. If the bears actually happen to have been proven wrong in here and fail to reverse and make lower high points, which will be validation, which will be confirmation if we retrace to the support area with probable breakout trades in here. If we fail that, if we fail an instant reverse right by Monday, obviously bulls will probably take it over, and next week's target will be, this context will probably be slightly updated to the upside, not that big, but slightly, which once it is, will give us the target to highlight for next week. We do have once again breakout in here, which means cycles are trying to be broken. I don't see it right now, which means this target is pretty secondary. It's more a volatility target. And until then, I still tend to forecast that this thing, no matter how bullish it looks like, still is a big range, which means I'm going to keep on doing my thing, as I think there is a very limited upward potential. We can oscillate to the upside, yes, but there is no bullish potential. Basically, we're oscillating throughout the same area, which means I'm selling, getting stopped out, selling again. If I get stopped out, I'll take it, and I'll sell again, and so on until I get confidence that this market can actually break resistance with value, because that's the big problem right now. I think we're rising prices, some more than other. Obviously, it's more like a stock pick situation, totally favoring the tech. I'm not talking about tech's problem that can lead in the future, but anyway, right now, tech is leading. The rest of the market is pretty lagging, and certainly more than anything else, the small caps. So it is, I think, something that we can assess for the next few weeks to try eventually balancing that spread and see small caps eventually starting to rebound, taking mid caps with them, and eventually big giga caps that have been totally away from any troubles recently might to start having some. So this is things I'm monitoring for now. It's still way too early to consider any ID or trading scenario for this. I'm monitoring the big market cap. We'll eventually get to talk about this by next week if we do have some early signals. So that will be only if we have a bearish case scenario, next week we'll eventually get to talk about who's been driving the bearishness, and I tend to believe that techs are probable candidate for this potential reversal. See you guys next week. In the meantime, trade safe. This is range, so don't be too much bullish or bearish. That would be just a very, very bad choice.